Okay, let's do an overview of how I draw noodles, but realistically, it's going to be a fun exercise in how I think about liquidity, because ultimately, liquidity is fundamentally all that matters. We can do it two ways. I'm going to look at the SPY chart and SPX chart. Let's do SPX first, just because I know that's what everyone's interested in. And let's get rid of all these drawings. I'll add them back later. It doesn't really matter. And it's good to have like some reference for your low of day, previous day low, previous day high, high of day, etc. You can also look at previous month, previous week, whatever. But where I start personally is on a daily chart, just because it helps me understand where there might be buyers or there might be sellers. Although I will say within the ICT method or methodology, whatever you want to call it, I actually don't even know what it's called. But within ICT as a whole, people only look at liquidity, right? And there's no such thing as buyers or sellers. It's only price delivery. And fundamentally, price delivery is what I look at when I mean liquidity, or when I talk about like who's buying and selling. It's all price delivery ultimately. And so what I'd like to do usually is just mark out levels. And we don't have to mark out every single one of them. I just want to mark out a couple that are key. So we've seen this area get defended twice. We've undercut it twice and then ripped up every single time, or at least in these two instances. And that's been a level of support in the past, right? And we know that, prior day low was here, prior day high was there. This is from today. And this is from Friday last week. So we can mark those out as well. But I want to just mark out this level because I think it's interesting. And I want to mark out this level because it's been defended a couple of times, right? So when I'm looking at the daily chart, at least I have some bias for where we might go and reverse up, or if we close below this, you're going to go down. And that helps me inform at least my drawings there, right? And I'll turn off these indicators as well because I don't actually think we need them. Key levels, get rid of that. EMA I'll keep, and volume I'll hide because I don't think we need it for this instance anyways. When I'm drawing this out, I'm literally just looking at the 15-minute, occasionally the 4-hour, because I think 4 hours get to tell you exactly where there might be pockets of liquidity, right? So on the 4-hour coming here, I can see that we have almost a head and shoulder pattern, right? You have left shoulder here, you have your head, you have your right shoulder. We dumped and then kind of repeated that process. And same thing might be happening here where you have your left shoulder, head, and right shoulder, and then, kind of go down into that area. So that's what we see on the 4-hour. We'll get rid of all those drawings. And I'll show you how I do it on a day, right? So if I go back to the playback mode, and let's see if I can actually open that, or maybe not. I don't actually remember how to do it, but anyways, it doesn't matter. When I'm drawing stuff, usually I'm looking at, okay, have we rated this liquidity, right? If there's relative equal highs or lows, there definitely is one. If we rated that, then I'm going to be drawing something towards the upside. And my target will be the previous high, right? Previous local high, previous high, previous high, previous support, previous low, and then previous low here as well. So when I'm drawing this, I'm really looking at, okay, are we going to move up towards this layer of liquidity? Because for me, price just moves between layers of liquidity. So you've defended this area. We're now going to move up towards this target. And then from there, that's really usually where my take profit is for any calls that I might be buying. And then this is my take profit for any puts I might be buying. So if I had a drawing this way, then that's really where my target is. So that's what I'm using at least in the early noodle formation to figure out exactly where the market might head, where there's layers of liquidity. And at least I know directionally I'm either going to go up to this level or going to go down to that level, right? And that's how I've been playing the noodles on SPX and SPY. If I look at the SPY chart, it's a bit easier for me because I can at least see the pre-market and post-market. You don't get that with SPX. And so when I was drawing that noodle this morning, for example, and I said, I think I have 688 as my downside target, which we never got to. I'm surprised we held this shape or these levels quite a bit, but I think it's going to nuke tomorrow. We'll see. When I'm drawing the shapes in the morning, I'm really looking at, again, the same levels, like pre-market high, pre-market low. And have we rated one side already in the post-market or pre-market before you go higher, right? So once a raid happens at this level, like I know you're going to go down. Once a rate happens at this level, and they're going to go up, and that's exactly what we got, right? So let's just do a blank noodle from none of these. We'll take a random day from, I'm going to go back, some random ass day that I don't even know. Okay, we'll go back here. January 2025. Okay, I don't even think I was trading at this point in time, but it'll be interesting to see what happens. Let's say I don't know what holds for me on that day, but I know, pre-market, we had this huge drop down, but from 608 to 599, 593. And so my bias here is like trying to figure out, do we get back towards that 609 area, right? So like one of the noodles I would draw would be something like this. We raid liquidity, go a bit higher, raid liquidity, and go higher. And that's one example, right? Another thing I can look at here is like if there's any previous lows or previous highs that I'm looking at. There's one at 685.84. So we might have a noodle that looks like this, where you raid liquidity, stop at a bunch of people, consolidate, and then go lower and then go towards that 684 level, right? And let's see what we get. Do we get top noodle or bottom noodle? I think we got something on the top. So if I were to place this exactly into this shape here, we're pretty close. We're almost bang on, like without having seen exactly what was happening that day. We're pretty close towards getting to that upside target of 6 or 7, right? And we ended up rating that afterwards, like it took 2 days to play out, but like, you know, that noodle held its shape pretty well, so I'm happy with that. And let's just do another random day, for example. I'll pick something from maybe here. Okay. I'm not looking. I'm trying not to look. Okay, I'll pick this one because I want to see what happens here. Okay, we have pre-market, we have post-market, we rated liquidity all across this level. Again, you were ranging between 594 and 600, never got above 600, never closed below 590. You have this huge gap down in pre-market. One of the noodles would look something like this, where you rate liquidity lower. So we rated this, consolidate, rate liquidity at these relative equal lows, because that's how I draw my noodles, and then go higher towards that 598 target. Another one might look something like this, where you consolidate, rate liquidity from relative equal highs, and then kind of go down towards that 587 target. Let's see what we get. I think we got the reverse. So if I were to take these noodles that I drew and put them here, I think it would be pretty close. Rate liquidity around this area, and then go lower towards this target, right? So that's how I've been playing it. I just try to like establish relative equal lows and relative equal highs within the noodle itself. And the targets for where the end point is for this noodle is always on the relative equal high or relative equal low before that. And then lower if there's any support or any levels that I mark out, which is around that 583 area, right? And we probably raid 584 or 584 in this case, and then go higher. And that's kind of what we got. And then same thing here. You rated 583, undercut, and ripped higher. So that's how I've been using noodles, or these drawings. They're just a tool for me to draw out the best case scenario and draw out the worst case scenario. And then from there, I just mark out where I think the market might head, right? So if I go back and undo all these changes, give me some time. I want to get these drawing backs on SPX. There we go. I'll go to my SPY chart. And that's what I drew this morning. And we can get rid of the volume profile because I don't think we need it. So I'll turn that off. SVP, get rid of that. That's what I drew this morning. And I had like head and shoulder here, right? You have your left shoulder, head, right shoulder, could have nuked down towards that 682 imbalance, right? This imbalance here. Or could have consolidated and moved up towards that 696 target is what I said. And so we kind of got there, but never closed above 698. And tomorrow I'm expecting something similar where we raid, like, let's say this layer of liquidity, or maybe it's this noodle that transpires tomorrow, I don't know. But I'm looking for something like this tomorrow, to be honest. And tomorrow morning, I'll do the same thing where I'll look at, are there relative equal highs? They're here. Do we raid that side first? Consolidate, rip up, like undercut and rip up, and then go up? Or do they raid this liquidity here? So, it'll be something like this where you consolidate, undercut, and then rip up. Or they did reverse where they gap up a little bit for no apparent reason, consolidate, undercut above, and then go down, right? We could also see the same thing happening on the other side. So that's how I've been drawing them. And it's been pretty cool for me to review these. How often I'm right is kind of shocking. I shouldn't be right as much as I am, to be honest. But that's how I draw my noodles and how I draw the layers of liquidity where their targets might be. So that's what I've been doing. And then typically if we sweep one side, let's say we sweep relative lows and you undercut them, you're more likely to go up. And that's how I create these targets. So like I have 705 for the upside for the end of the week and 676 to the downside. And the reason I say 676 is because that layer of liquidity was defended multiple times. So they might undercut here and then rip up, or they might undercut above like 698 and then go down. So we'll see what happens, but that's how I use it. Hopefully this is helpful. If not, tell me and I'll do it again. Thanks.